All right, let's dive in. So, have you spotted the new TransUnion numbers, Lior? More renters are actually self-reporting their rent payments now. It jumped up from 11% in 2024 to 13% in 2025. I know, it doesn't sound wild until you think about all those extra people potentially breaking into the mortgage market, right?
Yeah, it's not a huge percentage, but it really matters. Especially because, and people miss this, the Federal Housing Finance Agency, FHFA, rolled out this game changer. Now, Fannie Mae and Freddie Mac have to accept VantageScore 4.0 instead of just FICO. Rent payments show up in that new score, so suddenly all these renters who've just been paying on time, every month, they can use that history to qualify for a mortgage. And for first-timers, that's a big, big deal.
Exactly. Like, honestly, rewind to my early 20s in Melbourne, I had zero credit, nothing. If I could have just been like, hey, I'm a good renter, here's proof, maybe I wouldn't have had to beg the bank manager for, a credit card with a $500 limit. I remember sitting there thinking, how am I supposed to get credit when no one gives me any credit? This would have helped for sure. I mean, it's almost like the rules are finally catching up to real life,
For sure. And it's funny, because the US has always been kind of stuck on FICO, right? Like this old school monopoly. Now with FHFA saying, no, you got to take VantageScore, it's opening up competition, which is overdue. Fannie Mae and Freddie, they are the big fish. So if they change, the whole pond changes. And Ruby, it's not just first-timers. There are folks who've been renters 20 years, always on time. Now maybe they can finally buy. That's huge.
Totally. And from what I read, most renters pay on time, like religiously. They've just never gotten credit for it. So this shift could let a lot more people even consider homeownership. It's a bit wild to think it took this long to count rent, isn't it?
But here's the twist. While renters are doing more self-reporting, fewer property managers are getting involved. The stat now is just 44% of building managers are reporting rent payments, which is lower than before. I don't get that. The more you report, the more people can build credit. Why pull back now?
Yeah, it's super odd, right? Especially since from the data, over half of renters say they'd rather choose a manager who actually reports to the credit bureaus. It's almost like property managers are leaving value on the table. Plus, nearly 80% of renters are like, if my payments are being tracked, I pay on time. It's incentive 101.
Right. And here comes my real estate story. So I've got this client, Anna. Her building manager didn't do reporting at all. She went rogue, found a third party, and started self-reporting her rent history. Flash forward, her credit score improved noticeably, and she's now planning to buy maybe even sooner than she expected. So it shows, even if your manager doesn't help, you've still got options. But it shouldn't have to be that hard,
That's it. And I mean, the less support from property managers, the more work renters have to do. Not everyone's going to go hunt down a reporting service online, especially if they don't know it exists. Imagine all the people just missing out. It's like property managers could be heroes here, but a bunch are sitting it out. I don't get it.
Maybe it's reluctance about paperwork or tech, but the point is there's demand from renters. And honestly, if managers don't adapt, they're going to lose out. Renters have more tools. If you're looking to attract reliable tenants, being a part of this reporting system is basically a win-win now.
So speaking of people who could win big here, Gen Z is the headline act. But here's the curveball. Their rate of self-reporting dropped from 26% to 18% in just 1 year. You'd think with their thin credit files, they'd be all over this, but they're not.
Yeah, it's surprising. Gen Z's got the most to gain. Most of them just don't have years of loan or credit history behind them. I feel like maybe there's just not enough awareness about these new perks. Or maybe it's some app fatigue. Too many steps to bother.
Maybe they're just over it, yep. But on the flip side, states like California and Colorado are jumping in with new rules that force property managers to report rent payments. That's going to move the needle for sure. And not just for Gen Z, millennials, Gen X, even boomers are getting into self-reporting more now. It's not just a young person's game anymore.
So, big question. Are we actually closing the home ownership gap here, or just plugging a few leaks? Like, if policy makes it easier for more people to qualify for mortgages, that's great. But do we have enough affordable homes for them? And will the people who've been excluded for years really benefit?
Yeah, that's the million-dollar question. It's a solid move for financial inclusion, but it can't be the only move. Until we see more inventory, lower prices, and maybe a bit more education around self-reporting, that gap probably sticks around, doesn't it?
Right. It's a start. But there's more work ahead if we want financial inclusion to really mean something. Still, I think, looking at how fast these reporting numbers are moving, we're in for a pretty interesting ride the next few years.
Same here, Leo. All right, that's all for today's Nadlin Forum Podcast Daily. We'll be following this, and I've got more questions about what else could help first-time buyers, maybe in our next episode. Thanks for unpacking all this with me, Leo.
Always a pleasure, Ruby. Thanks everyone for listening, and see you next time.